In this illustration, we're going to show you how to complete the remaining entries under current farm liabilities on a 2015 farm balance sheet. We have already talked about the current portion of term debt and accrued interest on the term debt. Okay? And we also have talked about the loan balances that would go under non-current farm liabilities. Now we need to discuss accounts payable, notes payable, and something called other accrued expenses. And we're going to combine those all into one video. So let's talk about accounts payable first. Let's go right here. What would go in accounts payable? Well, when we talked about accounts payable in the chart of accounts, we said that an account payable is typically defined as any account you have at a distributor or supplier that just month to month. In other words, you can charge something during the month and pay it at the end of the month. So let's just suppose we owed money at the diesel distributor, the seed supplier, and the repair shop at the end of 2015, December 31st. We actually had an open account at these three dealerships over here, or these three suppliers, and we had charged during the month of December. We just hadn't paid it yet. It hadn't come due, but they are payable. Okay? So you would add all those up. You would get a total, and then that total would go right here. So this total would simply be $10,200, and that was what would go in that cell. Remember, that's a cumulative total of all the open accounts. But also remember, these are not loans. These are not term loans. These are not operating loans. These numbers are simply what we owe at some place that allows us to charge during the month. Okay, so now what's notes payable? Well, it's essentially it's the same thing, but it really refers to something like an operating loan. Suppose that this farm had an operating loan at the beginning of 2015, borrowed, I don't know, maybe $500,000. But at the end of, let's say, I don't know, sometime in November, they had some cash and they paid most of the operating loan off. But what they didn't get paid off was, say, $30,000. Okay, so here's our chart of accounts. Okay, for the operating loan of $30,000. Now, if that $30,000 was not paid when they paid the other part of the operating loan off, so let's just for a moment, let's suppose that the owner went in November 1st and paid as much of the operating loan as he could. So he paid $470,000 out of a $500,000 loan, but he had $30,000 he simply couldn't pay. So he's got that outstanding balance on the operating loan. Okay. Now, that $30,000 should go right here as notes payable. Okay? So this number right here should be that $30,000. That's how much he owes. That's a note payable. That's that operating loan, and it is due. In fact, it was due back in November. He just didn't get it all paid. You also know that that $30,000 he didn't pay in November, it starts accruing interest right after that payment, and it accrues interest up to December 31st. And that would be this amount of interest right here. That'd be that $450. Okay? That $450 of accrued interest would simply go right here. Now, you could have a choice here. You could actually put that accrued interest right here with accrued interest. You could add it to this accrued interest that's here, or you could put it down here in other accrued expenses. Or you could actually have another line that says accrued interest on operating loan. That's simply user choice where you would put that $450. So I'm going to go down here and simply put that $450 right here. Okay? Now listen carefully. What could other accrued interest be, or other accrued expenses? I'll put it that way. Well, anything on the farm that you pay for on an annual basis and you don't pay it on December 31st is going to have an accrued expense. Now, that probably didn't make a lot of sense, so let me illustrate. What if you pay your property taxes in September? Well, every year you pay your property taxes, those property taxes begin to accrue the next day, and they accrue for 1 year until you pay them again. So if you pay your property taxes in September, when you get to December 31st of that year, part of that next year's property tax has actually accrued. In other words, if you were to sell that land or something, you would have to pay a portion of next year's property tax. So that portion should go right there, other accrued expenses. Similarly, if you if you were to take out an insurance policy and pay it once a year on farm machinery, well, every time you pay that insurance policy, the next year's payment begins to accrue the next day. So if you paid your insurance in, say, April, when you got to the end of the year, uh, from April until December of next year's insurance policy would be accrued. It would go right here. Suppose you had a contractual rent agreement with a landlord and you pay your rent once a year, but it's contractual. In other words, it's not year by year. You've got a 5-year lease and you're in year 3, so you got to pay it, but you pay it once a year. Well, from the date you pay it until the next December, a portion of that rent would be accrued and it would go right here. So there are any number of items that could fall into this other accrued expense category based upon how you make the payments on something that you do have to pay. Okay, that should finish us with all the typical categories in current farm liabilities. There certainly could be others here, but these are the ones that are most typical and the ones that we're going to illustrate in this class. Plus, we have covered what goes under non-current farm liabilities. For quiz purposes, I explained to you what I'll do on the term debt, what I'll do on the accounts payable, notes payable, and other accrued expenses. I'll simply give you the information, and you can go in and do all the calculations that you need and be ready. I won't give you numbers that you have to do the calculations. I'll just give you the numbers. What I'm interested in is whether or not you know where to put those.